So many people are suffering from fear, uncertainty, and doubt. That's FUD. There's no doubt there's a big wall of worry that we're climbing in these markets, and many people are uncertain of whether they should be holding on or exiting and running for the hills. But in this video, I'm looking to unpack how people are feeling, how people are looking at the markets, and addressing some of the points people are making. I'm also going to look at the bigger picture, where we are in the cycle, what's happening, where are we going over the coming year or so. And hopefully, by analysing the charts, we can start to understand where we are and what's going on in the bigger picture. If that sounds good to you, come and join me for this week's show. Welcome back to Prodigal Son Crypto with myself, Chris. Now, first of all, looking at Bitcoin. Okay, so clearly we've been in a bear market since October. And we've been now ranging for about 5 or 6 weeks in this zone here. You know, it went down as low as 60k, and we've also made a move up to around 73, 74k, and we wasn't able to get above it. So now we're coming back testing around this 65, 66k area, and you know, I think there's a few areas here that you've got to look at. Okay, so if we do come down, we've got all of this area here, which a lot of trading was going on there. That was back in 2024. Yeah, that was a long, painful correction lasting several months, and there's definitely some demand in this area if there's not going to be the demand here right now. Okay, obviously we want to start seeing a break above 74k, really, to start feeling like there's some momentum. If that's a relief rally or whether that's a continuation of a bull market, we will be yet to see. Now, if it was to come down lower, you know, you've got 59k down here and you've got around 53k as well. Now, pretty much all technical analysis is indicating that this is a bear market. It pretty much looks like we're going lower. We're below EMAs, they're crossing over, looks like it's rolling, you know. But I do believe where we are in the cycle, when I look at the ISM, the Institute of Supply Management, the PMI, where that's going. We've had a couple of positive readings recently in the last 2 months. You've got a weaker dollar. You've got institutional interest in Bitcoin, VTFs. I do think there's some headwinds as well, what with the Digital Clarity Act being kicked down the road, also what's going on in Iran as well. You know, there's definitely this wall of worry. But I think everything looks promising for crypto's future. And I believe that there's also a AI stock market bubble potentially about to form as well, which I'm going to show you later on in the video. Now, if the stock market continues up, continues to get good earnings reports, and you know, starts to run positively, I believe that that could bring a turnaround in crypto. You know, Bitcoin has come from 50% drawdowns before in the past and continued its rally into bull markets. Now, the 4-year cycle enthusiasts will not have that whatsoever. It topped in October, just like clockwork, and we're definitely going to see a 12-month bear market. I don't think there's any guarantees with that, because before that run with the ISM, and in this situation, the ISM is now just turning positive after spending the longest time ever below 50. Now, there's a few statements that are being thrown around a lot on crypto at the moment, because, you know, it's very bearish, it's very fearful, and there's I've just never seen sentiment so far in the gutter before. And you know, I've heard these statements before. I heard them, you know, in the last bear market, but I feel like the noise is getting louder as the price is going lower. And yeah, I just want to answer some of these things and how I feel about them. Okay, so a lot of people saying retail got burned in 2021. They are not coming back. Okay, my answer to that is you do not need the same people to come back. There are around 8.3 billion people on this planet. 2021 was 5 years ago. Almost another generation is now of working and investable age. So you don't need the same people. You know, whoever got wrecked in 2021 and didn't make any money in crypto, um, there's nothing to say you need them people to come back. There's so many people in this world. Um, so we had SBF, yeah, Sam Bankman-Fried with FTX, Do Kwon with Terra Luna, and Maciejewski with Celsius. Other cycles also had villains, yeah. If you look back in history, villains in the stock market never meant it was over for the stock market, yeah. You had Bernie Madoff, Michael Milken, Jordan Belfort, you know him from the Wolf of Wall Street. So many other villains over the years in the stock market. Yeah, you know, every cycle, people come back to speculate. Volatility goes both ways. It's human nature to speculate. So many people want to get rich quick and take on the risk. You know, it's like gambling. How many people lose money gambling? People always go back to it. The gambling industry is huge. I'm not saying investing is gambling. It's actually a more educated form of gambling, I think. So anyway, I believe you can manage your risk better, and I believe you can speculate on various different classes of assets. Obviously, crypto is one of the riskier ones. So you know, Bitcoin's your safer bet, but we'll get into that further as we go on. Now, new retail comes when number has already gone up, not the other way around. Okay, new retail are not the smart money. They don't like say, oh, you know, crypto's down at the moment. Maybe now's a good time to get in. Smart people do that. Smart people like you, maybe, because if you're still around. Okay, what they do is when you get a big green candle, you know, on the weekly or monthly, and everyone starts to talk about crypto again, that's when they start to slowly come back. And as people start posting online, you know, that they're making money and, you know, people are boasting, telling their friends, then they tell their friends and then they all start to speculate. And that's how it goes on. So you get the most amount of new retail investors at the highest point of the chart. Yeah, not the lowest point. Okay. Um, Smart money sticks around. It is interested when it's not interested. Wealth is built in the bear markets, not in the bull markets. So what that means is the money and the actions you take now will be the wealth that you have in the bull market when it comes. Yeah, it's not about, you know, waiting for it to be bullish and then start to get bullish. No, you need to be bullish when everyone's bearish and vice versa. If they won't be fooled again and crypto is a scam, why are you still here with the builders, the developers, and the institutions? Yeah, because when you look around in this space, okay, people are still developing, people are still building, people still believe, people who work in the industry, the institutions believe as well. They're setting up all the rails, all the apps, and you know, they're setting up all the connections, and it's all happening behind the scenes. And yet, no one's really talking about it now. Everyone wants to talk about the fear, uncertainty, and doubt, and all the FUD with the geopolitics and the economy, you know. But yet, when the markets move up, people will be like, oh, damn, you know, they were building that all this time. That was all being worked on. This was all looking positive back then, but we didn't see it because we was too busy absorbing the FUD. And that's what you've got to be careful not to do. Next thing you hear people saying, there's too many coins and not enough liquidity. Yes, there are, but more than 95% of coins are memes or dead projects. But it's quite obvious where the majority of the value is. I mean, you only have to look around and you can see where the institutional interest is and where real capital flows to. Okay, whether that's Bitcoin, Ethereum, other majors, you know. Diversify your portfolio amongst key ecosystems that have real users, great UX, that's user experience, and on-chain data that proves that the chains are being used and transactions are taking place on them and capital is being locked on there. Okay. What coins have institutional interest? WoW accumulators are advancing with real development. SEC cleared blockchains and ETF approved assets are safer bets. None of this is financial advice, of course. Infrastructure projects and altcoins linked or tied to and cross-chain compatible with major chains, still risky, but are in with a chance to pump when that ecosystem or narrative runs. Capital flow rotates and speculates down the risk curve, starting with the lowest risk, Bitcoin, Ethereum, big caps, mid caps, low caps, narratives and memes. Kind of runs in that order. Don't get me wrong, you still get that popcorn effect, things popping off at different times, but it does tend to sort of flow in that direction. Some will hold attention and hype longer than others, but capital will flow around many projects. Okay, so what I mean by that is like, your Bitcoin, your Ethereum, they will hold attention for a long, long time. Solana, things like that. Okay, then you might have things that get a bit of hype for a little while and then it drifts off. It could be that people are interested in dexes at the time. People could be interested in NFTs or gaming or something like that, or it could be privacy coins, things like that. And then what happens is capital will flow into those types of coins and then it will disappear and go into something else. So the general big projects and layer ones will tend to hold the interest throughout that bull run, okay, and take their turns in running, but narratives will pop off at different times. Remember to take profits and don't FOMO into hyped narratives. Yeah, be smart, be early. So if you're a clued up investor in crypto and you are spotting a new narrative that could run, then put a little bit in there early before everyone's talking about it. Don't wait till every YouTube channel is starting to talk about something. Like, for instance, the privacy coins or the AI coins. You don't wait till everyone's talking about it to then go and ape in and make a portfolio of AI coins or a portfolio of privacy coins, like some investors would tell you to do. That's definitely the wrong thing to do. If you want to spot narratives, spot them early. Don't wait for all the influencers to tell you that that's the narrative. Now, this is another one, okay? The economic conditions are unfavorable. Really? Okay. Well, most of the world is in a cutting cycle, okay? And they don't tend to chop from cutting to hiking quickly, okay? Unless there's a real problem. The world's biggest economies are increasing their money supply, okay? Go and look at the M2 charts. That's not just US M2. Look at China, look at Japan, look at Europe, okay? We've seen quantitative tightening end in the USA and Europe, okay? Now, we haven't got into quantitative easing yet. Well, kind of have, okay? Some plumbing, as some would say, but tightening has ended. Back in 2017, yeah, there was no easing, okay? But there was no tightening. The reason why we've not seen a great bull market in the recent years is because we've been in a tightening phase. We are witnessing some of the biggest technological advancements in human history. A bubble is almost inevitable in this computing technology long super cycle. I'm not talking about this short-term cycle being the long super cycle. I'm talking about go back, because the long cycle is like a 60-year cycle. Okay, so you go back to like the 80s. Okay, when the internet was invented, and that's bringing us up to the end of that era, because now we've got AI. It's just going into another level now. Okay, but there's bigger cycles and there's smaller cycles within them, and this is a big cycle that we are in right now, because you had different ones. You had like the Industrial Revolution and all these other types of cycles in the past. This is the world of computer technology. Okay, indications of expansion such as the ISM are turning positive. Okay, the ISM has been quite a good, reliable indicator for when good times are coming in the markets. Okay, they don't call the absolute bottoms, they don't call the absolute tops. Okay, don't use it like that. Use it as an indicator to say, some positive times are potentially coming, and it's quite likely. Okay, the DXY is still looking weak. Been holding the zone for a while. We're going to look at the charts in a minute. Okay, but nevertheless, if you zoom out, it's in a downtrend, and that downtrend could continue, and that would make sense. Okay, with Scott Bessent and Donald Trump wanting a weaker dollar so they can refinance the $9 trillion of US debt. there's lots to be refinanced. Now, I've got some other interesting stuff to run through with you today, and I'm going to start building my case for this, okay? I haven't really pre-planned how I'm going to describe this, okay? I've just got a couple of slides as well to go through with this, okay? But just looking at Bitcoin and the time it spends in areas before it moves. But first, before I do that, I just want to indicate, that the RSI is still here at this extremely low level, seen only before at bear market lows, okay? Yes, it went lower after the early 2022 dip. It continued lower into the end of 2022. Okay, but one thing I want to talk about today is that I like to read books by W.D. Gann. I think he was a great investor and analyst, okay? And one thing that he used to say was about the several weeks and several months, and we're going to get into that in a minute. But Bitcoin likes to spend, there's so many, see all these little lines here, okay? Because this is going to give a bit of context to what I'm going to talk about in a minute. Okay, a lot of these little lines are on average around several weeks, okay? Could be 6 weeks, could be 8 weeks, could be 7 weeks. And it depends on where you measure it, but it's just an average, of a several weeks, okay? Now, Bitcoin at the moment has been down at this low, okay, for one. Now, don't include the first dip, include where it's trading sideways for almost, okay, or where it's ranging. Yeah, it could be going higher, it could be going lower, okay? So it was down 1, 2, 3, fourth week took a rally, you could say fourth or third week it took a rally, okay, and now we're in about the fifth week. Could we have a couple more weeks here before seeing the next move? I think that's quite likely, okay? Could be a couple more weeks before we get a breakout to the upside, or it could be a couple of weeks before we break down. As you can see, all of these little lines, little yellow lines, that's where we've spent several weeks. And you can go back in Bitcoin's history, find so many times where it's literally about several weeks, okay? See, going back into the previous cycle, you can see that as well. Going back into the previous bear market, you can see that as well, yeah? But then you also get some of these periods where it's like several months. Now, you could argue that this was several months, okay? But you had several months at the bottom of the bear market where it was really like trading below that line, okay? And then it was like that, okay? You had the several months from the previous, all-time high of 2021 to the second all-time high of 2021, okay? And then you had this sideways period here in 2018 before it broke down, okay? So you can also get that. Now, this might argue the case for the bears who think that, or the 4-year cycle enthusiasts, they could be bullish for all we know. They're just bullish about there being a bear market where they can buy lower. Not everyone's just fudding it and saying, it's over, it's dead and all that. Some people are like, no, it's going to be good, but we've got to wait. And that's fair enough as well. So could this be several months? Maybe. We only spent several months here in 2024. Maybe this was several months already. So maybe this doesn't need to be, but there's no indication for that. But, we've got the RSI down here quite low. Who knows? Maybe it takes a run up, comes back down. Then you get your several months. You get your several weeks, a rally. Maybe it spends several weeks up here somewhere, comes back down, several weeks up. And this could even happen lower, who knows? But like I say, some of these other charts, which I'm about to show you, if you carry on watching, they're going to show that I don't believe why that's going to take so long. So stick with me. So W.D. Gann, here's a quote from him, okay? Time is the most important factor in determining market movements, and by studying the past records of the averages or individual stocks, you will be able to prove for yourself that history does repeat, and then by knowing the past, you can tell the future. Maybe not as easy as he says, okay, but there is some truth to that, okay. I believe, like he's saying, you can see patterns in history with different cycles. I've mentioned the long cycle. I've mentioned the 18.6-year real estate cycle. I've mentioned the Shemitah cycle before, the 7-year cycle. Okay, and then we've got the business cycle, which is the ISM. and which is the economic cycle. Okay. We're doing a little bit on WD-GAN today, okay? And like I was just showing you on the Bitcoin chart about the sevens, okay? Several weeks, several months, okay? The number 7, WD-GAN. The number 7 is the basis of time, and a panic occurs and depression in the stock market every 7 years, which is greater than the 3-year decline. You will find on the weekly chart that stocks will often reverse the minor trend and run up 2 to 3 weeks, but the third week it will not make a higher top or higher bottom, similar to what Bitcoin done recently, okay, in the last week, okay? Yet at other times it will hold for several weeks without advancing above the level it made in the first 2 weeks rally, okay? So then it's going to hold for several weeks, okay? Gann talked about rallies, declines, accumulation, and distribution happening in periods of several weeks or several months and several years. But why 7? Well, Gann was a devout Christian. He took many of his cyclical beliefs from the Bible, as read in the book Tunnel Through the Air, which I have read. Okay. He often quoted, "The thing that hath been, it is that which shall be, and that which is done is that which will be done, and there is no new things under the sun." Basically talking about the things being cyclical. What has happened before will happen again, okay? The number 7 holds profound meaning beginning in the book of Genesis, okay? God created the heavens and earth in 6 days and rested on the 7th. Sabbath day is the 7th day, okay? Shemitah, which I've read a lot about in this book, The Mystery of Shemitah, okay, by Jonathan Kahn. Okay, Shemitah is a 3,000-year-old Hebrew tradition. Farm the land for 6 years and rest it on the Sabbath year. Okay, I also found evidence of the Rothschilds influencing this in early Israel as well. Okay, now in more modern eras, there has been a mysterious show of this in the stock market. Okay, so you might want to take a screenshot of this so you can go and research it for yourself. I looked into this. I've looked at the charts of the S&P 500 as far as I could go. I also researched when there was financial panics, depressions, recessions, and everything like that. And you can go back, and this every 7 years it happens on average around that year. Could be within the year before, could be that year, could be the year after. Usually quite likely happens towards the end, and I'm going to show you on the S&P chart in a moment more recent times. But like just more recent times, you had the post pandemic recession. You know, you had the China that was in 2021 to 22. You had the Chinese Russia financial crisis in 2015. You had the 2007, 2008 subprime mortgage crisis. You had the dot-com bubble, you know, the 87 crash. You know, you can go back to World War One, World War Two, credit crunch, you know, there's so many different things. The Great Depression, you know, as you can see a few of these images here that detail some of those moments where markets were impacted and they all kind of fell. They were like the news story to go along with liquidity being pulled from the market. So just showing you this here on a really plain S&P 500 chart, okay? Now, some of these dips may not seem that big and some will seem that big and some, but at the time, everyone felt their pain, okay? I mean, if you look at it, I mean, at the stock market at the moment looks like that, okay? It's a minor dip, okay? So look at this, 2021 to 2022, and if you're using crypto, you know that was bad. Okay, that was during the Shemitah then, okay? 2014 to 2015. 2014, it was around the top. 2015, it rolled into a bottom afterwards, okay? You had 2008, okay? We know what happened there. You had the dot-com bubble and fell into like, you know, 2001, 2002. Yeah, find the bottom. You know, some of this one's smaller here, around 94, but nevertheless quite a dip at the time, no doubt. And then you've got like, you know, 86, 87, sorry, 87, 88. Okay, yeah, big crash. Okay, you had 1980 to 1981. The crash fell just after. Okay, you've got 1973 to 1974. I could literally plot this out in history and show you that there was dips and crashes and recessions, and they all fall around those 7 year periods. Okay, so what I'm trying to say is one of my theses for remaining in the markets is the next Shemitah will be in September 2028 and will run till September 2029. Now, what does the market do in that time? You know, do we see a climb throughout? Don't get me wrong, there's going to be dips along the way. Yeah, there's always dips in the halfway dips and all of that stuff. I mean, look, some of these crashes, it doesn't quite didn't pick up the 2020 crash, did it? You know, it didn't pick up this 2025 crash, okay? Yeah, so there's going to be crashes along the way. But what will happen there? You know, some of these crashes were huge, particularly if it's the real estate crash like that, okay? And that's what I want to look at next, okay? So looking at the HDX, okay? Let's take the EMAs off of this, okay? So you can see it quite plainly, okay? Now, the 18.6 year real estate cycle, yeah, found its bottom around 2008, 2009, 2010, okay? So the expected top with its of the new the next crash of the 18-year real estate cycle would believably be around 2026, okay? Now, you already see that this looks similar, okay? We've got lower highs forming, failing to get above, okay? It would take around, usually from top to bottom, around four years, okay? So look here, it's you know, started topping around 2005, you know, it was by the bottom, it was 2009. It's 4 to 5 years, okay? Now, 4 to 5 years from here, okay? Could be seeing you down in 2028, 2029, 2030, somewhere like that, okay? For, you know, and that is quite a recession. It can bring a recession, okay? A housing crash like that, okay? And I believe the markets are going to run hot, okay? And then with a boom is always followed by a bust, okay? So I believe the boom will come before the bust. Like we've already discussed, retail investors are not here, okay? In all the other big booms of the stock market in the past, the retail investor was there to get burned, okay? And they haven't been seen for a while. And even AI, okay? Yes, people may have some investments in stocks and everything, but if you, you know, your working environment, your social environment, how many of your friends or family are all in the stock market or all in crypto at the moment? Not many, not many, okay? So then we look at the NASDAQ, okay? Like I say, this could be a bubble forming, okay? Back in 96, 97, okay, this is where stock market started to break standard deviation and run up into the final stages of the dot-com bubble, okay? Now, I believe this could be a tech bubble of AI, robotics, and blockchain, okay? We've broken standard deviation once back around 21, 22. We corrected back to the trend line again, and we've tested this now for a second time to try and break through. Now, I truly believe that we could see the stock market, this is a NASDAQ by the way, break standard deviation and get into one of these types of peaks, okay? This technology of AI, okay, robotics, and blockchains there as well, okay? Some of the most advanced technologies the human race has ever come across, okay? And I just can't see there not being a bubble where droves of retail investors come and get involved, okay? So I do believe the hype's going to be there, okay? As I said as well, you've got the ISM, yeah, the ISM now above 50 for 2 consecutive months, okay, and actually with a score of 52 and above, okay. Now, previous times when this has happened, this has led to huge rallies in the stock market and crypto in more recent years, yeah, 2017, 2021, okay, but this goes back throughout history and indicates good times for markets. This is one of the longest times it's spent below 50, Okay, you can go back and check that yourself. Like we were saying also, this is the DXY on the monthly. Okay, it's got a historic trend line actually going back to 2008, I believe. Where is it? Yep, 2008. Okay, this historic trend line. Okay, yeah. This will be the 18th year of this trend line. Okay, we've already seen it lose it slightly before. It went down and touched this 200-month EMA. Okay, it looks like it's got a bit of a bounce for now, but nevertheless, these EMAs are rolling over bearish. It's below the 50-month. The 5 and 13 are rolling over. Okay, this, given the fact that Trump and Besant want the weaker dollar, okay, so they can refinance 9 trillion of US debt. Okay, it could be the year that this will break. Yeah, bang on the door enough times and it will open. Okay, so that's where we are with the DXY. Okay, we've also got a new Fed chair coming in. Very likely we're going to get more interest rate cuts. Yeah, CPI is falling to some people's debates, and also, you know, job numbers. I think unemployment will go up because, especially with AI taking people's jobs, it all seems very inevitable for me, if you ask me. Then we've got gold. Okay, when will it top? Who knows? But what I will say is we're now at the 4618, finding resistance. It found resistance at most of these levels and found support as well. Now it could get to the 5618, but I would say this is a parabolic climb. There will be a correction at some point. Okay, this RSI is up quite high here on the weekly. Okay, when it's got this high before, you know, it's been sort of local tops as well, but you know, who knows? It could go higher. There's bound to be a correction at some point. You know, if we saw a correction like we did into the end of 2007, okay, where it rallied up like this, 2006, then it came down. Okay, in that time, the stock market took its final leg run up to around October. Okay, and then when the stock market started rolling over and the housing was also collapsing and everything, obviously you had gold take a bigger rally. Okay, then it also crashed with everything else back then. Like, gold will crash with everything when it's those times. Okay, but you know, I believe there's going to be some sort of correction. All it needs to do, I believe gold will go higher over the years to come for sure. But I believe that if it was to be a correction, that could give the room for the stock market to really run and crypto to run as well. And there's some charts here that indicate how that happens as well. Okay, now this is gold versus Bitcoin. Okay, RSI reading very, very high. Okay, now what we've seen, and I've shown this before in my videos, so you might be familiar with this. Okay, Bitcoin tends to do these patterns where it drops, you know, 99% against Bitcoin. Yeah, and during that time is when Bitcoin's really thriving. Bitcoin's going parabolic. Okay, and then it sort of comes back up, and then it rolls over. Okay, and it does that. Okay, over and over again in these sort of like tries to double bottom, then fails. Okay, we're kind of in the biggest formation of that we've ever seen on gold and Bitcoin. And you could say, well, maybe that means that gold's bottomed against Bitcoin for good. Bitcoin's done. Okay, I don't think so. So RSI reading is very high here. Okay, I do believe this is going to roll over at some point, and then that will give. If this rolls over and takes a leg down lower, will it go 90%? Will gold go down 90? And this doesn't mean gold goes down a lot. It just means that Bitcoin goes up a lot against gold while gold is correcting. Okay, and I believe that's potentially going to happen. We've got other indicators of that, how that's going to happen as well. Okay, because copper, gold tends to run in tandem with the ISM. Okay, when copper goes up against gold, it's usually while the ISM's going up. Okay, as you can see with these waveforms here. Okay, its RSI is at its lows. Okay, it's also at the lows of this trend line again. Okay, and each time it's done that, then it had a rally. Okay, and those were times when the ISM ran. That's when the stock market was good and crypto was good. Okay, people talk about quantitative easing and quantitative tightening. Okay, well, we're seeing something similar here. or this RSI, yeah, for the Fed balance sheet that we haven't seen since before 2020, where it took a big dip down and a big recovery. Okay, I'm not saying you're going to get 2020 style quantitative easing. I don't think it's that at all. But is it an indication that we've bottomed? I mean, yeah. Look at this as well. Okay, they don't chop from being tightening to easing and all of that like a lot. I mean, I can zoom out and show you the whole chart of this. Okay, yeah, yeah. They don't make moves very often. Okay, when they make a move to reverse, it reverses. Okay, and this looks like it's reversing, doesn't it? So, yeah, I think it looks positive that, although it's just positive that we're not tightening, okay? Whether this is, whatever this is going to do, we don't know. But it's just positive that we're not tightening because it's been this time that's been hard for the markets ever since like 2022. Yeah, it's been hard, okay? And even though certain, major indexes and your Mag 7 and Bitcoin's run, okay? Now, 2017, there it is here, okay? Yeah, there weren't no easing, okay? So, but there wasn't tightening either, yeah? It wasn't till after 2018 that you saw tightening, which was during the bear market. So we've had bear market tightening conditions, okay? Looking at the US 10-year yields, okay? This tends to move with the ISM as well. Very similar timings, okay? Bottoms, like, look where the bottoms are, okay? Yeah, tops, yeah. Now overall it's in a big downtrend, but then it's sort of broke the downtrend and it's held. But nevertheless, all the time that the ISM has been down, it's been kind of just holding here, okay, and kind of down as well, yeah. So as the ISM is now breaking up, is this starting to find, these were higher lows, yeah, and now it's kind of doing higher lows as well. So that's another indicator there to see what's possibly happening, And Bitcoin dominance. Bitcoin dominance is just hanging around here, really, isn't it? Okay, but the only thing I want to say about Bitcoin dominance today, because we've covered it a lot and nothing's changed, is that I still remain convicted that a cycle does not end with Bitcoin dominance at the highs. It ends with Bitcoin dominance at the lows. It ends with speculation and risk taking. And I believe that'll be the same for the stock market. Because when you've got the ISM going up, okay, and above 50 clearly, okay, when it hits above kind of 52 area, that's when you really start to see the risk taking going on in the stock market as well, not just crypto. Okay. Look back here in 2020 when it sort of got above 52. Okay. That's where you saw the Russell 2000, which is 2000 of the lower cap stocks in the stock market. Okay. Go back to 2016. Yeah. When we got above 52, then that's when you saw the big climb. Don't get me wrong. The stock market had been going up before that. Okay. Been going up from its lows. Okay. Very similar to what it's been doing now. Yeah. It came up from its lows before we went above 52, and it's slightly above with a new all-time high. But it hasn't gone on a rally yet. Not like this, not like that, not like that, not like that, not like that. Okay, see, and this was all of the past election cycles. Okay, the US election cycles. This is when the ISM moves with the election cycles, with the business cycle, and this business cycle has been extended, been proven that. So I believe that's why it's good to still stay in the markets, along with everything else I've said today. And just one last thing before we close the show. Okay, total free, excluding stablecoins against Bitcoin, still holding a higher low. Okay, and as is the others versus BTC. Yeah, so potentially when we start to see a recovery in Bitcoin and in crypto, we may start to see a faster recovery with altcoins. All of that is potential, given that Bitcoin dominance at its highs, with the ISM climbing up. It's always been a good time for altcoins back in 2021 and 2017. I believe this market could turn around way quicker than most people can imagine. So we've unpacked a lot in today's show: the psychology behind the markets, the timing of the markets, and a lot of the contributing factors to why we could still be in a bull market, despite what the 4-year cycle enthusiasts are saying. Price action's been boring, it's been dull, it has been bearish, yeah. But don't forget what I said, yeah. When everyone's bearish, maybe it's a time to be bullish, okay? Like Warren Buffett said, yeah. When others are fearful, be greedy. When others are greedy, be fearful. Okay, so be smart money. Don't be dumb money. Don't be flocking with the herd, yeah, and just rolling with what everyone's saying. Don't base it all around simple technical analysis that is taught in books. Okay, try and look outside the box, put all the pieces together of the puzzle. Yeah, the cyclicals, the fundamentals, technicals, the economics. Yeah, put all of those things together, and then you'll have a better idea of the picture. I'm not saying I'm going to be right, and none of this is financial advice, okay? But I'm just showing you what I believe in and the way I look at things, okay? So even if you don't believe in what I'm saying, try and take some of what I'm saying away and give it some thought, yeah? Look after yourselves. I'm not going to do too many videos, okay? Because markets are pretty dull. Not a lot's going on. I just like to give you an update every now and then to show you how I'm still thinking, how I'm still feeling, yeah? Not much has changed, yeah? Nothing's changed, yeah? See you soon.